Thank you very much for your participation. Today, well, let me introduce myself. My name is Neil Emberson. I am the CEO of KNG International Advisors Group and KNG Alternative Investments. And this is a webinar where we've been doing this for about 5 or 6 years, international investment webinars where we introduce different alternative investments, specifically for professional or accredited investors or qualified investors. So you can look at different possible alternative investments in the UK, our country. So almost all of the investments that we introduce, especially in terms of private investments, are in order to raise capital and private debt instruments or private equity as well. And for the benefit of those of you that are not too familiar with private debt instruments, we're going to give you a brief summary or rundown of what it is and especially how it fits in and why it should be incorporated into a diversified portfolio private debt instrument in order to help you diversify your portfolios. So many companies, especially UK companies, SMEs, seek to find financing and fundraise, and many sectors and many companies, it is difficult for many companies to find financing from traditional banking systems, and that's why they are willing to maybe use their assets as collateral via trust in order to guarantee or back their debt emissions that they themselves issue, these loan notes. So in this type of investment, for investors that seek high yields, these are opportunities for investors that actually want to enter a very specific sector, a very specific niche investment market, as we're going to see, which is litigation case financing in the UK. This is also an opportunity to diversify, and investors that are seeking predictable returns as well, because this is a fixed income instrument, high yielding instrument, and it's also a very good opportunity for all of you. And many of these companies, the risks associated or the risks that they are subject to can be very different types of risks, different from other types of investments that you would normally use in your portfolios or invest in. And obviously the sectors are very different as well. So it's an excellent opportunity for investors to diversify a portion of your portfolios from international investments in your portfolio. Speaking a little bit about alternative investments and how we are actually seeing alternative investments within our own portfolios, what we're actually showing you here are 3 different portfolios from very large pension fund managers. CalPERS California Public Employee Retirement Systems, which handles approximately $442 million. They designate up to 40% of their portfolio into alternative investments, and within their alternative investment portfolio, private debt currently is 5% of their actual investment. In the case of CPP Investments pension fund from Canada, they manage approximately $700 million, and they designate approximately 60% of their portfolio to alternative investments. And in terms of private debt, it's about 13% of their investments. And ABP from the Netherlands, it's also a very large pension funds, 520 million euros managed, and they designate around 20 to 25% to alternative investments. So the key is that alternative investments do have a place in all portfolios. You obviously need to be aware of the associated risks, understand how these risks are actually being mitigated in order to designate an adequate proportion of your investments according to your risk profile and risk appetite for each of your investors. When these products, these types of alternative investments, and especially private debt or private equity, are being offered to individuals or individual investors, it's very important to understand that this is an investment that is meant for qualified institutional accredited investors. Every country defines qualified investors differently according to your regulatory bodies. In the UK, for example, FCA regulates this, and they categorize institutional investors, capital managers as professional or accredited investors. And when we look at this at a personal individual level, it's important to understand that in order for an investor to actually qualify for the investment that we are going to show you, they have to have minimum income of 100,000 pounds per year, which are around $130,000. You have to have a minimum asset capital of 250,000 or 230,000 US. No, that doesn't include your home. It has to be an individual that works in the financial sector as well. We have a long trajectory. We have many attendees here that are financial advisors, so you qualify. You are considered accredited investors if you are a financial advisor. But it's very important when you actually offer your investments to your clients, you also need to ensure that they qualify as an accredited or qualified investor. Every country has their own definition of what an accredited investor actually means. We can consider the FCA as maybe a standard in the world in this sector, but it's very important to mention this before we actually offer it to your clients. And lastly, before I pass the microphone over to Kevin and I introduce Seven, I like to show people this slide to showcase exactly where these types of investments can actually fit in terms of an investor's capital. Obviously, we have essential expenses. So these capital for investing in a private company should never compete ever with essential expenses, nor savings that cover your essential expenses, nor savings, nor insurance plans. Savings and insurances, it would be like the second rubric when we have the capacity to actually save and actually buy insurance protection policies. This comes after covering our essential expenses. And when we have leftover capital, only in this case, when we've covered our retirement fund, the educational funds, all types of insurance and protection, and all the capital in order to invest, at that moment, that's when we should start to look at and analyze possible private investments like private equity or private notes, venture capitals, and leveraged investments. That's the order, and it's very important that you consider this when you work with your investors before we actually go on to the presentation. Okay, very well. So I am going to, at the end of this presentation, also support Kevin with any doubts or questions that you may have, helping out as well. As many of you know, whenever we do a presentation for new investments, in this case, we can say that our inventory of investments, well, this is a new addition to our inventory of investments. In KNG, we dedicate, at this case, approximately 8-9 months doing due diligence for this company. We had many interviews. We have a deep due diligence package that is available, that is published on our website as well. And we made the decision then to invest ourselves first in these instruments before we offer them. Okay, so you can consider that as well. Very well. Now I am going to stop sharing my screen and I will introduce Kevin Pryor, which is the CEO of Seven Stars. Despite Kevin speaking Spanish quite well, and he has a lot of desire to do so, for the good of everybody that only speaks English, I asked him to do this presentation mainly in English. However, please use the interpretation functionality where Serapis is translating.
Neil, thank you very much for the introduction and for that a very informative and interesting presentation up to now. Very much appreciated, and thank you to everyone for their attending today and for showing interest in Seven Stars. Just to check before I proceed, everyone can see my screen okay and everything? Is that right?
Sí, yo lo puedo ver muy bien.
Yes, we see it perfect.
Absolutely ideal. So just let me set it up so I can see my. Just give me 1 second. So I appreciate the opportunity to speak about Seven Stars with you today. I think before I jump into the slides, one thing I would like to say is that I always am asked to talk about Seven Stars as what it represents as an investment vehicle. Whereas I think it's important for me to also highlight that for those of us who have created this company and grown it over the last 3 and a bit years, whilst it does represent an investment opportunity for us, it also represents something else, which is a genuine opportunity to impact social change within the UK. That may sound a bit stuffy, but it's a vital part of what we're doing. I started in this sector 7 years ago, and when I began in litigation funding, it was solely about what was the cost and funding requirement and what was the return on investment going to be. But the longer I worked with law firms, the more I realized that there was quite a scary fact, and it's the quote which, if the screen has changed correctly, it's the quote which appears at the top of your screen at the moment, and it's simply this: that if civil justice is to be affordable, it is necessary that methods of funding meritorious claims or defences be available to parties of limited means. This came from Lord Chief Justice Sir Rupert Jackson in a report from August 2014. And when you read the report and you dig in, you start to realise that up to 93% of UK consumers do not have access to legal representation when they need it. So when they're at a time of need, a time when they need representation or they need recourse, they do not have access to legal representation. That's just an astounding and stunning number. And we're not talking solely financial complaints here. We're talking things such as what we call HDR, which is housing disrepair. This is where quite often a distressed or a needy person is living in a property which is rented to them or provided to them by a housing authority or the local authorities, and the property is substandard. Now, this often can just be leaky windows, but quite often this leads to impact on health, and as has been highlighted in the news in the UK a few times over the last couple of years, quite frankly, death. Young children dying as a consequence of mold and damp within the property. It's quite a tragic situation, and it's expected or anticipated there's almost 500,000 properties in this condition in the UK. Financial advisors that have misadvised their clients in respect to pension transfers, these type of claims also need representation. They need recourse. Quite often these are retired people who have lost their nest egg. They've lost their assets. Neil spoke eloquently earlier about having different pots of money. Well, these people had a pot of money which they lost through poor advice. So undisclosed commissions is another element. Undisclosed commissions such as Plevin, PPI, and what's called PCP. Plevin is a case about undisclosed commission on financial products. PPI was an insurance product which was sold by banks and credit card companies. And PCP car finance, these are finance agreements where the interest rates were manipulated to hide commissions. They all have a very simple thing. They are abusive to the people that have purchased the product or been missold the product or are dependent on the product for their own peace of mind, their own security. I mean, you imagine you're a self-employed individual, you have you're convinced by your bank manager to take out an insurance policy, which, should you not be able to work, would pay off your credit card or your loan payments. And lo and behold, when you do actually have to make a claim, you're not eligible. It doesn't work. Then when you find out on top of that, for example, that up to 73% of the premium you paid every single month was a commission that was kept by the bank, then that becomes quite an intolerable. So what we found is that trusted institutions such as IFAs, banks, credit card companies, they're more often than not either failing or directly profiteering from what are basically vulnerable individuals and consumers. So what we did when we set the company up, the objective was really simple. Because these people do not have the money or the means to access representation, they need to be represented on what's called a no-win, no-fee basis. This is where a lawyer will take their claim, will process their claim, and will not charge them any fee unless there is actually physically a win on behalf of that claimant, at which point they retain part of the winnings or part of the settlement. Now, the reason that's important is whilst the law firm, from its own cash and savings, might be able to represent 100, 200 clients, what we do by providing finance to these law firms is we let them represent 1,000, 2,000, 5,000, 10,000 claimants. That in itself is important scale, both in terms of the law firm being able to work in an efficient economic manner, but also in terms of the claimant market, because we can actually have an impact. We can make a difference with people that have these types of claims. Okay. So how we do this is very simple. If you like, the original and the initial concept was to monetize a legal claim. How much is it worth when you buy it? How much is it worth when you sell it or settle it? We do it by funding the legal costs, which are called disbursements, which actually allows the law firms to represent more and more claimants on, as I mentioned, a no-win, no-fee basis. Okay. There are a few conditions for us. Now, as a business, we are not directly regulated. There is no regulation for what is our sector, which is a small business lender. However, we only lend to regulated law firms, and these are firms which are regulated by the Solicitors Regulation Authority in the UK. Or we lend to claims management companies, CMCs, and these are regulated by the Financial Conduct Authority in the UK. Those are the two strictest regulators, certainly within Europe. So it puts us in a very, very strong position. It also means that we're working under English common law, which is globally recognized as one of the most correct and one of the most uncorrupt legal systems that exist. Okay. We fund small claims. We don't fund these huge multi-million pound claims where someone wants to sue Apple because their battery declines every time an update on software comes out. We fund individual claimants that have genuine claims types. So housing disrepair, as I mentioned earlier, undisclosed commission on financial products, or where there's a government legislation in place, such as the compensation scheme, which is run by the Financial Ombudsman, and the Financial Services Compensation Program, where there's been a loss, for example, in financial advice, pension, these sort of things. The other element that I learned very, very early in this whole process was a very simple one. It's great winning, but only if you can get paid. So therefore, we will only finance cases against liquid entities, be that banks, be that credit card companies, housing authorities, utility companies, or even the government compensation schemes themselves. Okay, that's the basis of our principles and the three cornerstones of what we're looking to try and achieve. Okay, our process is very simple. I won't run through every single step, but I will say that we receive an inquiry from the law firm. We'll carry out an extensive due diligence procedure on them. Up until now, that's been an internal process. We've now contracted with an external firm to be able to pick that up and take that on for us, specifically because by doing so, we have an extra set of eyes on our own work. Okay. We have an advisory panel. This is an advisory panel that signs off on all investment decisions that we as a company make. So it's not one person sat in an office. It's not me because I like a lawyer. It is an advisory panel which is made up of the King's Counsel, which is the highest level of qualified legal practitioner in the UK below a judge. It's made up of a barrister, which is one step below King's Counsel. We have 2 chartered accountants. We have a corporate tax specialist, and we have someone who spent over 40 years working within the regulated pension industry in the UK. These guys all make up our advisory panel, and it is only with their approval and their oversight that we will actually agree to fund a law firm. Okay. Once we've agreed funding with a law firm, we will then pass it through the legal processing, advance money to them. Key here is that we do not advance money just to buy claims. We will only advance money against an asset that the law firm already has. So they need to have a book of existing claims, which we can audit and which we can have a valuation upon. And at that point, we will then make a loan against that existing asset. Our security there is that we will take a debenture over the law firm. So we have a first charge over everything that the law firm has, including property, laptops, desks, you name it, we have the charge over that. And then we will continue on monitoring and auditing the law firm and the book of the claims on a monthly basis. This includes management accounts, the right to inspect and review the bank account, and also obviously a spot review of the claims book itself. Okay, it's important at this stage to say that our funding is full recourse funding, which means our agreements with the law firms are very, very clear. You either pay us back out of the settlement that you receive by winning a case, you pay us back out of the insurance which exists on the claim if you were to lose, or you pay us back out of your profits and your cash. We have no performance-based risk in terms of result of the claim. We are very much tied into a fixed term, fixed payment. Okay. Bernie, did you have anything you wanted to add there on that? Bernie is my head of international funding, so he's sat on the webinar with us.
Hi, Kevin. No, I would just stress that what we have is a portfolio of thousands of small claims. So, and we are, as Kevin said, we cannot sorry, I lost my thread. Sorry.
No problem at all. There's a real.
Sorry, I've lost my whole screen. Sorry.
Oh, no worries, Bernie. Don't worry. I'll carry on. On the next screen, we'll jump onto the portfolio itself. But what Bernie was trying to say is that there's a huge diversification element in what we do. I launched this as what I call the 30-30 rule, which basically means we have no more than 30% of our assets exposed to any one law firm or into any one claim type. Now, obviously, when we started the business up, there was 3 of us sat in an office. We started funding 500 claims with one law firm. We now have 48,000 actively funded claims spread across 6 different law firms, I think it is. So we are still to get to our ultimate diversification goal, but we're working towards it. But I'll cover that on the next screen here. And as you'll see, our highest concentration at the moment is 48% within what's called pleving claims. Those are very, very solid, straightforward claims, and 95% of those claims don't even go to court. They settle before there's actually a court date. Subsequently, 45% of our current funding is sat with one law firm because they're holding that book of claims. But generally across the board, you can see that there's an element of diversification, and the more funding we lend to law firms, the greater that diversification becomes. Okay. On the left side of the screen, and as you'll see in the presentation that we send to you, there are a number of questions with regard to risk mitigation that we take. So, for example, solicitor default, we try to avoid that by not lending to those type of lawyers in the first place. Ongoing monitoring of the accounts and the management accounts and the bank accounts gives us foresight of where there may be a problem. And the debenture actually gives us a senior position. So if there is a default, we're in a much stronger position than if we solely had security over a small book of claims that we'd funded. Unsuccessful claims, again, after the event, insurance is specifically designed to cover costs if there is a loss. We don't invest in, or we don't acquire claims that we view as contentious or risky. We like what I call binary claims. It's a very simple yes or no. Does it hit the series of boxes that condition that claim? If so, it's funding. If not, then it's not considered. Settlement delays, as again as stressed, the diversification rule also means that we can be involved in contested probate claims where the average settlement is 18 months to 2 years, and we can be involved in irresponsible lending claims where the average turnaround is 3 months. It gives us a very good balance on the portfolio for cash flow purposes as well. Okay. The current market at the moment within the UK, it's been increasing every single year and will continue to do so. I mentioned at the start that 500,000 housing disrepair claims are what is projected to be within the marketplace. To put that in comparison for you, that is £1.25 billion of funding just to cover all of those claims. So the full market at the moment is worth 2.7. As you can imagine, there is a huge scope within the market. And there's a great deal of growth, exponential growth ahead. It was estimated that at the close of 2024, there were over £2 billion worth of claims sat in the hands of litigation funders, people like ourselves. Okay. UK litigation in itself is a very good sector in terms of investment. It's a judicial system which is respected and considered to be one of the best and one of the most transparent in the world. It works within a very clear system of clear legal precedent. This is where the Supreme Court or the higher court hands down the judgment. And then statutory law means that judgment is then applied at every inferior court level. It means that a judgment on our claims is not dependent upon whether the judge ate well, didn't eat well, has indigestion or not. There is no variance. And in fact, quite often, like I said, almost 95% of small money claims don't even go to court. That in itself is quite substantial and quite important. Okay. Stability and diversification. Again, it's a mitigated and managed portfolio with clear diversification across different claims types, and there is active case management. So as we've expanded and as we've increased our claims book, we have also now taken on an external audit firm who use partly human eyes-on auditing, but also they have live artificial intelligence-based auditing so that they have a clear 24/7 365 view of what's going on within every claim book. That also gives us a lot of very clever data because it means that we can compare law firm A and law firm B, see what their processing periods and times are like, and from there that will also then help us in assessing, is a law firm performing, do we have issues with the way a law firm is processing its book. Also from an institutional perspective, as Neil correctly stated, alternative investment, private debt, private capital, it's an increasing sector in terms of appeal to hedge funds and large investment funds. Litigation finance within that is becoming an increasingly recognized alternative asset class. It has the benefit that it is uncorrelated to other assets. It really doesn't matter whether the stock market's going up or going down. Litigation is a continual in terms of values and incomes, and it's a growth market. So it's a really good situation to be involved in. Given that we acquired a lot of our book over the last few years, I think as it stands at the moment, we're sat on close to 90, I think it's 95 or 96,000 claims that we have security over and we're looking to finance. That's the type of growth that we're talking about, both within the company and in the market itself. Okay. Bernie, are you back with us?
Yes, yeah, I'll back up. So sorry about that.
No problem. Could you just run this slide for me a second? I just want to grab a glass of water.
Yeah, of course. So why should anyone think about investing in the litigation funding market? As Kevin's just said, it's a diversified asset class, uncorrelated to other of the mainstream investments. And also we have that sort of managed risk on our underlying loan book, which is scrutinized before we lend, and it's scrutinized while we're in the process of lending. We're also, again, stressing that there's thousands of claims there, and we're not dependent on the claims all winning because we get paid anyway. So we've got a diversified portfolio. Even if one small claim is lost, it's insignificant in the overall portfolio, but that risk is covered by the after the event insurance anyway. We have a secured debt position, which is key. We're lending money to small businesses. We're in first position. We are paid first. In all instances, we are paid before the client who is taking the claim. We get paid first in that debt stack. So we have our securities in place over the assets of the law firm. There's an insured element in the after the event insurance. We insist that that's in place on cases where there's a risk of adverse costs if the case is lost. And the point of that insurance is that we know that the law firm will be able to make a claim on that insurance policy and will therefore have the cash to repay us our loan. So the key points for investing in litigation are we've got that diversification, it's uncorrelated, and there's an insured element. What we're trying to give investors is certainty of outcome around the whole legal process, which is why we take the small consumer claims based on the key precedents that have already been decided in court. So most of the cases that we're funding are more processing rather than a means of going to court to fight to get the justice there. That fight has already happened. There's a legal precedent in place. A key example of that is the car finance. We've had it's a potentially huge area in the UK. There was a big court case. There is a precedent that has come from that. And that gives us a clear run now that we know exactly the types of cases that we can fund that will be successful because there's a clear precedent in place. So by working on those types of cases, we get a certainty of outcome. And by diversifying, we spread any of the risks there. So those are the key reasons for investing within litigation funding.
Perfect. Thank you, Betty. So just jump back on here. There we go. Now, the team is made up of a very wide range of experience and background. So, for example, Duncan is a director of the company, and he is an international tax specialist and has spent many, many years setting up and establishing companies and investment bond mechanisms. He does all of our relationship with the Vienna Stock Exchange, with our brokers in Switzerland, and with our registrar and the regulated entities that we work with from a financial point of view in the UK. Myself, economics background, I'm obviously the founder, and I'm actually the chief commercial officer, not the COO. Louis Doyle is the King's Counsel. He sits on the advisory panel. Andrew Deal is a chartered accountant. He is the chairman of a very prestigious charity within the UK, whose principal focus is social reform and social justice. So there's a very good harmony there. He's also the former chief financial officer of the University of Lancaster. And during his tenure, the university grew from a sort of a lower ranking entity into a top 10 UK university, specifically, of course, as well within the legal sector. The University of Lancaster Legal School is very well known and prestigious within the UK. John Walls spent over 40 years working in financial services. Leon Clarence is our chief strategy officer. Leon has a very, very long history within private capital and private debt. He's worked in film financing, He's managed probably about, I think it's 3 point something billion worth of actual physical assets. And before joining us, he joined a small litigation funding company that had a value of about 20 million. Took them to 320 million and Bloomberg listing before he left the company there, and came and joined us. So he likes growing and helping guide businesses as they grow. Stephen Chinnery is a member of our advisory panel. He is a barrister, as I said previously, one step below the King's Counsel. And Bernie is our institutional funding boss, if you like. Bernie, do you want to just give a potted background for yourself?
Yeah, I've worked in financial services industry for over 30 years now. Originally, I worked as an IFA, working with high net worth clients based in the City of London. I then worked, if you like, on the other side of the fence. I worked for a boutique investment house, and we were designing product to sell into the retail financial services space. So we did a lot of work in real estate, and the early days of wind and solar. So we would put together structures and raise investment into those. So my background from there, I worked as a consultant, self-employed consultant, and I've worked helping companies raise money, putting together structures for that, from private equity to debt. And a few years ago, I was approached by Kevin and Duncan to see if I would like to come and work with them on Seven Stars, and I jumped at the chance. So it's a really interesting space and relatively new to me, litigation funding, but we have a great team, and I think we've got a fantastic setup now.
Thank you, Bernie. So I'll jump on now to team track record. So over 380 million pounds raised and deployed in the litigation sector between the Seven Stars team, myself personally, and Leon. We've settled over 15,000 claims already, and the average return that we as a company have seen, we as a company in our previous experience, is 36% annualized rate. The collective management of claims of face value in excess of 500 million pounds. Again, that's the previous books that we've managed and funded, and the existing Seven Stars. And between the team, we have over 100 years collective experience in capital markets and private credit industries. It's probably also worth mentioning that Louis Doyle, the King's Counsel, is an insolvency specialist, which gives us a really unique perspective when we're looking at law firms, because not only can we see where there's warning signs, both on an upfront basis and also an ongoing audit, but it also means that should we need to execute security or such, we're in a very, very strong position, because from the start, our agreements have been structured specifically with that in mind. What is true is that our business is not a one-year business. We haven't designed this to be instantly profitable. We spent the last few years putting together an incredible book of assets. Okay, you'll see in the bottom right corner, we have 48,854 funded cases, but we also hold 93,847 unfunded cases. They belong to us, they form part of our security, but we haven't yet put any money into them, but they still are part of our asset. What that means is we spent a lot of money over the last few years putting money into claims, acquiring assets, acquiring books that have a lot of value tied into them. And that can be seen very, very clearly in the accounts that we've filed to date, and also the accounts and the provisional as we currently have them set, both for this year, for this period, and also for next year's period. If anything, I think next year's projections are quite low and tame in comparison to what the real value of the book is. But we've done that because these have been provided by our CFO, who is a chartered accountant, and obviously they have their ways. As you can see from a balance sheet point of view, our current portfolio assets are just over 22.31 million pounds. Our full complete liabilities are 17.4, which means we're currently sat on 4.9 million pounds worth of actual physical equity within the company. that itself is good because it gives us a great deal of cushion, if you like. The other thing that we aim for, when we started the business out, you'll see in the graph in the top right-hand corner that our security to loan and our security debt was maxed out at about 1.5, and our target was to operate about 1.5. We did drop slightly below, but if you look at where we're currently at, we're at about 2.25 for debt to security, loan to security, and almost 2 to 1 for debt. That means for every pound that we're owed, we hold £2 of security. That means for every pound that we've lent, we hold £2.25 of security. That puts us in a very, very strong position in terms of future. We hold around about £40 million of security as it currently stands. And that includes the fact that we have claims where we need to deploy an additional £14.65 million. That's the reason why we're here with yourselves, why we're going to be in Singapore and Hong Kong in the next 2 weeks, why we're regularly speaking at or invited to speak at family office summits in Abu Dhabi and these sort of things, because there's a growing acceptance and interest in what we're actually physically doing. This is just a summary of our current track record. You'll see that our first 3 issued bonds were all redeemed in full and all coupons were paid. You'll see that every single bond that we have issued since then, every coupon has been paid in full. And then there are a number of bonds that are currently in issue, pound, sterling, and a special Series 4, and something we've just launched in conjunction with a VARA regulated entity in UAE, which is a USDC crypto-denominated bond. That's for a separate conversation, but it's the very first recognized stable coin denominated bond investing in real world assets. So it's a really interesting play and something that we're quite passionate about. And part of the reason we'll be at the Token 2049 event in Singapore next week. So coming through structure, Bernie, do you want to run us through here for me?
Yeah, so at the moment we've issued listed bonds. So our bonds are listed on the Vienna Stock Exchange. And the reason that we've gone this route is there's additional security for investors by us working with regulated entities such as the Vienna Stock Exchange. In addition, we have, as you can see from the investor, the funds don't come direct from the investor into the Seven Stars bank account. We have Avenir and GC Partners who act as our receiving agents. Both entities are FCA registered. Avenir also acts as the registrar. They maintain the bond register. And this means there are certain obligations on us that we have to fulfill. So when clients invest, their money goes into this account. So it's into a segregated account. It's not directly into Seven Stars. Once the money has been checked, all the anti-money laundering has been done and funds arrive, then we must instruct our receiving agents where to send that money. So which bond is it going to and which law firms is that money then going to? So we have a degree of separation between client investment funds and the day-to-day bank account of Seven Stars. So there's clear separation there, which is an important point to make. Once we go through the structure, clearly we have our advisory panel and our audit teams who scrutinize the applications that we get for funding and then monitor on an ongoing basis. Once we've been through that process, we can then lend to the law firms at the bottom here. So we see the various law firms that we're going to provide lending to. Before we do that, obviously, we put in place a charge over the assets of those law firms. And that charge sits with our trustees, Verdant trustees. So we have an independent trustee who holds those charges. We also ensure that after the event insurance is in place, so each of the law firms that are applying for funding any of the cases that are at risk to losses, should they go to court, we must have AT insurance in place with a reputable insurance company. And under there, we have a diverse portfolio of small consumer claims. So all of this structure, we have our diversification, we have our after the event insurance, and we have the security that we take over the assets. So each of the bonds holds those securities, and those securities are held by Verdant trustees on behalf of the investors. What we also do is that Seven Stars Legal, having put in place this security structure, we grant a security over all of the assets of Seven Stars Legal. So we are offering a security that again is held by Verdant trustees on behalf of the investors. So in the event that Seven Stars Legal was to go insolvent, again, there's separation because the security trustee holds a charge over all of the assets of Seven Stars Legal, the Seven Stars Legal business, which in turn holds charges over all of the law firms that we deal with and all of the cases that have been funded through the Seven Stars bonds. As money is recovered from those bonds, obviously it is repaid through this process back to the investors. I'd just like to make one point on this is that we pay coupons on the bonds, and there are clear coupon dates stated in the terms and conditions of the bond. So on the 30th of June or the 31st of December, coupons are due to be paid to investors. On those dates, we have to ensure that there's sufficient cash deposited with the registrar to make those payments to investors. There is, though, a process that we have to go through. So we have to calculate each of the coupon payments due to each of the investors on each of the bonds that we have. Now, those bond calculations are then checked by Avenir, the registrar, to ensure that they match with the register of the bond. Now, all of this is administration, which unfortunately takes a little bit of time. So although the coupon dates are stated in the terms and conditions of the bonds as the 30th of June or the 31st of December, investors should allow up to 30 days for them to actually receive those coupons into their bank accounts. Because we have to go through this process of getting all of these coupon calculations signed off and agreed with the registrars, and then the payments can be allocated, and it's done across all of the bonds that we have. So unfortunately, we're not always in control of every step of that process because we're working with external parties. So it does take a little bit of time to process coupons and actually have them received into the investor bank accounts. But those key dates are for us as a business to make sure we're depositing sufficient funds to cover the coupon payments that we need to make. We then process those and distribute those to the investors. So please, please be patient on that point. We are making our coupon payments. We've made all our coupon payments that we owe to date and on time. So if don't chase Neil on those dates because your money hasn't hit your account. Give it a few weeks and the money will arrive in your bank accounts.
If I may add on that as well, part of their lending agreements that we have in place with our law firms is regular income payments from them. So most of our agreements have 6 monthly interest payments that the law firms need to pay to us, both out of settlement and their operational profits. That is what cash flows our ability to pay coupons from a balancing. So there's a lot of financial planning, a lot of structuring, and a lot of modeling that goes into the business behind the scenes on this. And then last slide, I believe, it's just a summary of the investment options that are currently available. That being US dollar and GBP 3-year bond. That has a 17.5% annual coupon, which is paid in both June and December each year. These, as you'll see, have their ISIN numbers. They're held on Crest Depository. So those are the full listing up bonds that you have available. And then a special bespoke situation that we have put together in conjunction with Neil, which is a book funding opportunity that we currently have within one of our law firms that we wanted to be able to bring forward, specifically to be able to take advantage of a recent judgment and the upcoming announcement from the FCA in respect to redress scheme for car finance agreements. Again, these details are available on the PowerPoint that will have been shared, but we're happy to engage with questions on those. Again, just a very quick summary for you. Litigation funding and investment in Seven Stars is an investment which not only provides profits and income to yourselves, it actually provides access to justice for needy people, and it has a genuine social impact upon the recipients of that funding. Okay, it's diversified, it's uncorrelated, it's an accepted asset class that sits well both within the conscience and within the investment portfolio. It's a large market, but it's one which is increasing. The scale is expected to grow exponentially over the coming years. It has done so for the last 5-6 years, so you can see how that growth pattern would continue. It's a globally recognized and respected legal sector, which gives security and peace of mind. And the SRA, which is the regulatory body of the borrowers, are also one of the most respected regulators, certainly within Europe, if not worldwide. We operate within a diversified portfolio of small and precedent-based claims. I once said that means that our lending book is boring. I was told that I should put predictable. We know what the outcome is. We have a very good idea as to when, how long, what our win rates are, and this means our modeling is very accurate, and it means we can pretty much dictate exactly what's happening within the portfolio of lending we have. We carry out extensive due diligence. When Neil said that he's carried out extensive due diligence on us, it's true. Very similar to what we will do with a law firm. That includes our own internal reviews, a contracted external auditing review to come in and do a due diligence review as well. And these are kept on file so that we have very clear and concise information. That will then go in front of the advisory board before any decision is made or any funds are lent. Okay. When we do lend funds, it's under senior security, which puts us above and beyond everyone else in terms of our security position. We have an FCA registered security trustee and receiving agents involved within the cycle. So the KYC and the fund handling is carried out by regulated companies. And whilst I've not been as passionate as I usually am, I think you probably would have noted, we are very passionate about what we do in the market. Very, very passionate. It's the extent of the impact that we can have. Some of the stories and some of the cases that we have had interaction with can be quite heartbreaking. Even a question as simple to a claimant of what would you do with the money when if you win, and the response is, I will change my front door because it gets very cold in my house during the winter. That's quite heart-wrenching in terms of what we're trying to achieve. And then I think the key is a market-leading team. The team has huge experience. There is many, many years of experience, of knowledge, of expertise going into what we do. And again, if I have to close on anything, I close on the same quote from the same report that I opened on, because it is at the crux of everything that we do. And that is that if civil justice is to be affordable, it is necessary that methods of funding meritorious claims or defences be available to parties of limited means. We go back to 93% of consumers in the UK do not have a voice and do not have representation. That has to change. Thank you very much for your time. I'll drop the screen share and hand the mic back to Neil now.
Guys, thank you Thank you very much for that. Very, very explicit, muy explícito. Bueno, yo voy a hablar en español, sí.
Well, now I'm going to speak in Spanish.
Sí, entran varias preguntas. Yo creo que vamos
There's several questions. I think we should just go directly to the questions. And one of these questions is related to, well, it's a combination of questions. It has to do with this specific slide here. I think this is for the benefit of people that actually got here a bit late, but we're actually looking at here in your presentation here in terms of the distribution of the types of litigation cases. We understand quite well how the 30-30-30 diversification, an interesting concept. But for the benefit of those people that asked me these three questions, from the litigation cases that we're looking at here, can you please explain, very briefly explain each of them, like, and which of these cases has the ATE insurance and which do not have ATE insurance or after the event insurance? And how do you charge these firms, these law firms? Is it a fixed interest or is it a combination of maybe do you participate or is it only a fixed interest that you charge your law firms? So for each of these cases, can you please elaborate brief details?
Yeah, no problem. Thank you, Neil, and for whoever raised the questions. So if I run around, 48% of the portfolio is what's called Plevin claims. So if you remember, I mentioned PPI, which was the insurance policies that were taken or sold on mortgages, on credit cards, on bank loans, and car finance to a certain degree as well. There was a big recourse program launched by the FCA, which saw £48 billion go back into the pockets of consumers. But that was only 50% of the actual policies that have been sold. There were a huge number of policies that were rejected because they couldn't evidence that the claims had been missold or they were outside of what was called the limitation period. So one particular claimant, Susan Plevin, she went to the court because she found out that 73% of her premium was a commission that had been hidden from her and had been paid to the bank. 73%. She won. It went all the way up to the Supreme Court and a judgment was handed down, which basically says if there is a commission in a fiduciary or financial relationship that has not been declared to the consumer, then they have the right to claim under the Plevin ruling. This 48% makes up nearly 30,000 claims, which we basically were able to acquire and we placed with one law firm. So that is Plevin. That is undisclosed commission on payment plan insurance policies. Okay. 19% is irresponsible lending. This is where banks or credit card or loan companies gave credit facilities or loans to people that did not have the financial means to actually take that loan out. So rather than, if you imagine an envelope drops through the door, it says you're pre-approved for £5,000 credit card, just fill out the form, sign and send it back. That, for example, is irresponsible lending because they've never done any form of means testing on that person to see can they genuinely make that payment back. Those claims are really quick, really easy, and they currently make up 19% of the portfolio. Okay, 15% is pension mis-selling, and this is where people were given poor advice on where to reinvest their pension. People that had defined benefit pension schemes were suggested that they move it into more speculative pension schemes. They were given bad advice and they lost their pension pots as a consequence. These claims are quite substantial, and also these claims have a huge impact on people's lives. 8% is HDR or housing disrepair, which is where I talked about houses in poor standard of care or disrepair in this case. The 7% is probate. This is where there is an argument over after the passing of a family member, the distribution of assets, the sale of a property, these sort of things. And then the smallest section, but not for long, is PCP, which is car finance. Now, this is a sector that we've been monitoring closely for probably 2 years now. But it's a sector that we've refused to finance because we were aware that there were going to be some bumps in the road, shall we say, partly due to Louis Doyle and his knowledge of the legal system, partly due to my experience within PPI. We always recognized that to be a sector that was probably going to get a recourse program. And that's now been announced that is going to happen. We're still waiting for the final details. But now that we have that clarity, it means that prices are dropping, funding opportunities are quite strong for us. So we will now jump into that market. That's the breakdown of the portfolio in terms of case types. The other was with regard to how do we charge for our lending. Okay, our target ROI is 35% on our money per annum. Now, in some instances, that is 100% interest. That is purely down to us charging a fixed interest rate, which gets paid to us every 6 months by the law firm. Okay. Some claims, for example, probate, pension, we charge a lower interest rate, 20%, but we also take a slice of the profits or the settlement that comes about. Why? Well, because the claims are very big. If I look at probate as an example, I lend £9,000 per probate claim. The lawyer who I'm funding will make about £50,000 to £60,000 on each of those claims. So for me, I would prefer to lend the money at a 20% interest rate and take 10 or 15% of his income, because it means that my overall return on investment is much higher. Irresponsible lending, for example, I have a really good deal there. I lend £1, and if that claim settles in under 6 months, they pay me £1.50. If it's 6 to 12, they pay me £1.75. And if the claim goes past 12 months, they pay me £2. Irresponsible lending settles in 3 months. So I'm able to make a 50% return on my capital in 3 months. The law firm doesn't care because I'm not lending much money per claim. So he still makes huge margins on his activity there. My funding means that he has a much larger book of claims. So for him, it's a play on scale of economics. Did I cover all of the questions that were raised, or did I miss one?
So, si puedes contestar la pregunta.
Well, can you please answer the question about timelines or deadlines? I understand that some of them are 3 months, some are 6 months, up to 18 months. So, seeing the different types of cases, what are the timelines? How much do each take to solve each type, broken down by type, claim type?
Yeah, no problem. So the Plevin book, which is the 48%, we acquired it 6 months ago, and we're already seeing settlements and claims. Nothing's gone to court, and it is all just literally negotiations with the banks, submitting of data. They come back, make an offer, back and forth. We would expect that entire book will be cleared by the end of next year, so probably another 15 months, and that'll all clear out. Irresponsible lending is probably 3 months on average for settlement. Pension claims is about 18 months. Housing disrepair can be 9, 12 months. Probate claims are 12, 15 months. And PCP, up until now, there's been no settlements on PCP because everything was stayed pending the decision of the Supreme Court, and also pending the redress scheme. Now that the announcement for the redress scheme has been officially confirmed will happen, and we're waiting for the details, I would expect over the next 9 months that a huge amount of that book will actually start being settled by lenders. And then when the redress scheme kicks in, it's meant to be an 8-week settlement period from submission.
Okay. Entonces,
Okay, so therefore, so in your 36-month loan note, you're actually going to use the capital for your investors several times, because obviously the cases are going to take maximum 18 months, right?
Correct.
Very well. And well, out of those 6 different litigation case types, which involve the ATE insurance types and which do not, and who actually pays for that insurance?
Okay, so I think it's important to clarify. ATE is a policy which is taken out for the benefit of the claimant. The lawyer takes it out to protect the claimant from A, having to pay opposing costs if they lose, and B, having to pay their own costs, which is what the law firm has borrowed from us, if they lose. So therefore, it has to be a justifiable act on behalf of the claimant. So if there's absolutely no chance whatsoever that the case is going to go to court, so for example, pension mis-selling claims do not go to court. They go through the financial ombudsman and via the financial services compensation scheme. Therefore, those claims do not need ATE, and you cannot justify an ATE model on those claims. What we then do, for example, on pension mis-selling, is we model the actual success rates that are reported every 3 months, and we adjust our lending. So to give you an example, a law firm brings me £1 million of claims of income value. I'll immediately depreciate it by 40%, which means I valued that book at 600,000, and then I will lend him 65%. So I'll lend him £400,000 against a £1 million book value. That's how I offset. That's how I self-insure, if you like, that type of claim. Probate would require ATE because those will invariably go to court. Irresponsible lending doesn't, because they don't go to court. That's just a negotiation back and forth. Housing disrepair would require ATE because you almost always have to launch a court date as a means of pressurizing the housing authority to actually talk to you. PCP wouldn't need ATE because PCP is a portal process. You could still take ATE on PCP to cover own costs. But again, you have to justify then in front of the Law Society and the SRA that was in the best interest of the claimant to do that. So.
Okay, muchas gracias.
Thank you so much. So the role of the security trustee burden, the role of the trustee burden, what frequency do they do an audit though of all your processes and all the litigation cases? How often do they audit in general? Like exactly what do they do in general so that the investors can actually trust in their role and the responsibilities that this trustee has?
They will basically have access to everything that we do. So they can access and view our audit results when we audit law firms. They get our accounts. They see our management accounts. They have full and unfettered access to everything that we as a company have from our borrowers, because at the end of the day, the only thing they can actually assess is how our loan book is going, because that's where their security actually would be executable and where it sits.
Okay. Y hay una frecuencia
and is there a specific frequency that they use when they come in and audit? And if an investor wants to actually speak with the trustee, can that be organized, set up?
In theory, it could be organized, yes. It's never happened. I mean, 17 million pounds of current investment and all of the cases, it's never happened. It's never been asked for before, but yeah, certainly. I mean, we're more than happy to try and accommodate these things if they're necessary.
Bien.
Very well.
¿Quién vigila
Who oversees or who does the surveillance for the relationship between debt and assets for the attorneys? Do you have like an index, like of £2. You have a rate of £2 for every pound lent. So who's in charge of overseeing, of actually making sure that that's complied with?
That's a target. That's our current scenario. Our target is 1.5 to 1. So our result at the moment is superior to our target, but our target is 1.5. We do that. I just explained, for example, in terms of the pension mis-selling. If I'm lending 400,000 against a 1 million book, I'm immediately making a loan at 2.5 security to debt ratio. We create monthly audits of both the debt book and also the asset value. And now that we've brought in the external AI firm, we'll have much greater eyes on. When we started the business, as I say, it was easy for us to turn up at a law firm with a laptop once a month to audit their book. With 48,000 funded claims and 90-something thousands to fund, that's much more onerous task now, and we need that external facility to be able to do it. But yes, it's a combination of the audit company auditing the book, so we have a value of the book, and our CFO with regard to our indebtedness.
Muy bien.
Very well. A question just came in, another one. You actually mentioned that you use technology that uses AI. Can you please explain exactly how the AI process works? How do they use AI? How does it help you, and why is it so necessary?
I wouldn't say it's so necessary, but I do think it's a revolution for our business, and it will become ever more so. And I think any funder that's not embracing AI from an auditing perspective is probably falling behind the curve. So it's probably important to distinguish here. Some people, when they think of a law firm, they think of this practice that you would see on this American drama series. Quite often, these law firms are one lawyer, 5 paralegals, and everything is automated. So if you see an advert on Instagram for car finance and you fill out your details, and quite often that is all just an automated AI process. The AI picks the data out of the application. The AI process issues the request for additional information to the lender. It receives and does an OCD scan on the statements it receives. It creates the ledger. This is all automated, all AI driven. And because of that, there's a certain consistency of factors within the data. So what that means is that when we are auditing claims, we can use that same pattern, that same consistency for us to be able to identify. So previously I would audit 5 or 10% of a claims book by actually physically opening a file on the screen, looking at the retainer documents, looking at the KYC, the AML, credit checks. That can now be done on an automated basis because the AI actually queries immediately, because those are existing parameters that were set by creating the cases in the first place. So there's a consistency of us maintaining our audit systems in line with what the CMCs and law firms are doing to actually generate and run the claims. So it's us keeping up to date with what they're actually doing. But the general application of AI in processing business strategies is absolutely huge. Again, that's another conversation. It's a particular interest sector for me as well.
Muy bien, muchas gracias. Bueno,
Very well, thank you so much. Well, one last question. In terms of the interest that you charge, do you receive it until the end of the litigation cases, or do you receive it during that time? Do they pay you like temporary installments? Because your cases could take 3 to 6 to 18 months. To understand your cash flow that you receive, do you receive payments before or at the end only?
No. We have set interest periods. So I lend you £1 million today. In 6 months' time, you have to pay me interest. 12 months' time, you have to pay me interest. 18 months' time, you have to pay me interest. So it's regular income, particularly modeled so that we are certain. As it stands, our average, we had a credit evaluation carried out. Our average annual income at the moment is 32.1%. This is the interest element. And our average indebtedness in terms of interest that we pay out are 15.9. So we're operating a 2-for-1 cover at the moment across the book.
Correcto. Muy bien.
Correct. Very well.
Bueno, dos
Well,
preguntas más y luego-
I see another 2 questions, but I think we can wrap it up after these 2. So, how much capital
guardan como reserva
are you saving as reserve capital in these accounts as well? Anticipating any delay or anything for coupon payments, so you ensure you never default or delay payments?
We will start placing capital in respect to the coupon payments anywhere from 3 months, 2 months beforehand. So, for example, we now have our next coupon payment will become due in December, so we will now start setting capital aside to ensure we're covered. We need to be careful that we don't put too much money away too quickly because there's an opportunity cost for us, because that is money that we can also deploy in lending to law firms. So there's not only are we paying it out, it's stagnant, but also it's costing us money to have it sat there stagnant. So, but we plan accordingly, which is why we model in great detail.
Perfecto. Y la
Perfect.
nota que
And the loan note that you recently
un
launched,
año, pero
that
puede
1-year
ser
loan note that could be extended to 18 months, that specific loan, does that only apply to PCP car finance cases, right? It's not diversified amongst the other types of litigations?
The majority of it will go into PCP car finance. There'll always be an element of diversification, but the majority of it will go in. We have a book scenario where we have the ability to, I've got it on my board behind me actually, it's 89,600 PCP claims that we have the ability to fund. So we particularly have set that up to take advantage of that position.
Buenísimo. Okay.
Great, wonderful.
Sorry, Neil, may I interrupt?
Yeah.
Just on that, Kev, is it worth mentioning that, as we've discussed with Neil previously, for larger investments, there are opportunities where we can structure unique investment opportunities around books like the PCP. If we've got investors who are in the sort of maybe 1 to 5 million range, we can structure particular deals. Is it worth just covering that off?
Yeah, that's actually a good point. I mean, our principle. So when we first started this business and went out and started talking to people, family offices and larger investors basically said, no, you're too young, you're too new, you don't have the track record that we would normally want to invest. So we started a bond program. That bond program has raised our AUM to where we're currently at. And it means we're now going back and speaking to family offices again. We're now saying 3 years of track record, all looks good, perfect, let's talk. They're not interested in bonds. Those type of investments are interested more in bespoke structured deals where there is an element of profit share, like a managed account, an SPV type deal. We have huge access to law firms. We have huge access to claims that are requiring funding. So yes, I mean, where there's a need to structure a specific profit share, profit related deal where we're managing a book for someone, most certainly we are 100% open to that type of requirement as well.
Okay. No, excelente. Muy
Okay,
bien.
excellent. Very well.
Pues muchísimas gracias.
Well, thank you so much to all of you for the time that you've dedicated to answering so many questions. I think that it was very interesting for many investors to hear this, and to our financial advisors as well, so they can understand more about the litigation financing environment, to better understand and assimilate the different business model details. To end, I would like to announce this publicly. We are organizing a tour to the UK for investors to look at different investment companies that are seeking financing. This is for investors, serious investors that want to actually go meet investment possibilities in person, plus our CEOs, see the offices of the companies that we lend capital to. That would be in the month of April of next year. we have a training session for financial advisors as well in the city of Merida here in Mexico for regular savings plans, for the Dominion regular savings plans. Those of you that are here in the Merida, Yucatan zone in Mexico, we invite you on Friday, October the 3rd to be here. And Dominion Capital Strategies is coming from the Montevideo offices to actually do this training in Mexico. And we lastly have in October, we have in Mexico City as well, a cocktail hour for investors to actually update and look at an investment opportunity in the London Tunnels IPO. We've been raising capital for the London Tunnels for 3 years now. They're in the process of issuing their IPO in NASDAQ, and they're raising capital. 25 million pounds are being raised before their IPO, a pre-IPO. So we have a cocktail with the London Tunnels. Angus Murray, the CEO, will be coming for this cocktail to do this presentation. Well, thank you very much to everyone for your time. Kevin, thank you so much. Bernie, thank you so much. I know that we've been speaking for months and months now, so I'm super happy that we were able to actually have this webinar. We had an excellent turnout of people that actually watched it. And well, we're going to be in contact with all of you to hear all your updates. And certainly, we're going to get a bunch of questions that are going to keep coming in from everybody. So we'll be sending you those questions that we're not able to answer ourselves.
Kevin, Bernie,
Perfect.
Kevin, Bernie, thank you.
Thank you.
Thank you very much for inviting us, and it's been a pleasure.